Good morning, everybody, and thank you very much for being with me. This is Radio Wall Street, the MoneyMan Report, trying to do two things at one time, and I am
behind the scene.
yes,
you can
at
see
this
it.
time, at this point, have trouble doing one thing at one time, but we're here with you. So. I got a bunch of questions, and let's give the phone number. We're here. We usually have so much to talk about that I don't have time, but I really have a lot of questions that are piling up. I have a new invention, a trade that I want to talk about at length, but I want to leave room for people to ask questions. So could you please give the telephone number?
The phone number is 305-541-2350. One more time, 305-541-2350. Market X-ray.
Market X-ray. Well, no, I'm going to do questions now.
Okay. So
Right.
is Boeing
Well, okay.
expensive?
Since you bring it up, I'll go ahead with it. The market X-ray, and it is a very simple one. The stock market, by every measure that anybody can have, it is overbought. The sellers are the buyers are kind of losing steam because the volume has declined a lot since the spring, and yet there's really a number of stock markets because there's a market for basically every industry and every sector now, and they're not having even results. Mm-hmm. So particular parts of the stock market continue to rise, even though the people that are taking the averages and looking at the overall volume and looking at this buying power and all that, they all don't look that good. But when you look at individual parts of it, there's a lot of demand and people are buying them. And right now, it's happening in the small companies and the medium-sized companies.
Mm-hmm. It's so confusing.
Which are exactly,
does the market stay overbought for a month, months and months? Is that possible?
You're saying it's overbought, but that's assuming that everything stays the same, and that the people, the investors, are kind of like on a rubber band, bouncing around back and forth across reality, right? But actually, it's not all there is. There's really actual value. There's companies, and those companies become more valuable. And so the adjustment has to be made upward. It doesn't matter what the investors may have their moods, and they may go back and forth above them, but the actual value rises in certain areas. And one of the places I wanted to talk about was in the area of horizontal drilling and fracking, and that is making our country more valuable. A lot of other countries are becoming less valuable. Our country's becoming, the businesses in our country are becoming more valuable. And you show me, I've said this before, but I like the wording of it, you show me a country that has just found the biggest supply of inexpensive oil on earth, and I will show you a country that's making more money than it used to, right? Mm-hmm. And that's what's going on right now here. Let me just make this quick adjustment.
You said you have an invention and you designed three...
Yeah. Well, when do you want to get to these questions of the people?
Is Boeing expensive?
Okay, that's the first question. That's not my new idea. That's just an answer. And if you have questions or comments or you want to argue, we're here to involve you today. 305-541.
2350.
305-541-2350. We're here to take your calls. So your first question was, is it a good time to buy a Leap?
A leap on Boeing.
Remember that we introduced the idea of leaps about 6 months ago, and we did it at a time when there was a heavy correction, a real big, expensive, extensive, painful pullback, where eventually we were watching for these cathartic selling episodes
March and April.
Where everybody, yes, but where the sellers just disgorged their stocks and then
throw the towel.
Yes, and you run out of sellers, and at that point you have a very low risk entry point because the sellers are gone. And even when everybody agrees that everything's horrible and that nobody wants to invest, etc., everybody agrees, then they've all sold already. So there's nobody left. So one guy who wants to buy is enough to start moving it up. And eventually then you move into short covering, where the people who were short say, okay, that's looks like I've gotten about all I can get out of this, and they start to buy back those stocks that they were short, and that moves it. And then other people jump on it because the train feels like it's leaving the station. And that's the beginning of the new leg up, which we got in the spring. Right? We had the sell-off, and at that point, it was a very good idea to use the extra energy in leaps, which are long-term options. If you could take a year and a half or a 2-year position in a stock, that would be almost the same as owning the stock, but you'd be able to get a lot more energy into it, a lot more leverage.
You get in
into
cheap.
It.
Okay.
Yeah, not so much that it's cheap, it's that you get more bang for each dollar because you're maybe paying 10%
that's what I meant.
of the money of 10% of the money that the stock costs, but you actually have that stock for 2 years, and any changes that take place in it, you get a large portion of it. So you get a lot of leverage, bottom line. But that cuts both ways. And right now, for example, I love Boeing as a company. Over the next several years, there are going to be trillions of dollars worth of new airplanes for the new middle class generated all over the world. Boeing's going to sell 40 to 60% of those airplanes. But right now, based upon the growth that I see for Boeing, the company's not cheap. Now, people are asking, isn't this a good time for leaps, because they see that Boeing came down, but it didn't come down enough. So right now I'm kind of neutral on it, but if you were asking me what are you going to do about Boeing, I would say you could acquire that stock and just start putting it away for your kids, and you could just acquire a little bit at a time, and over the course of 5 years, I have no doubt that you're going to make a lot of money. But if you're asking me about a leap now where I'm going to use a lot of leverage, then I got to have good timing as well. So Boeing is not there. It's dangerous anyway, but you got to get it exactly right, little margin for error. So I want somebody that's cheap. Give me a big correction that everybody's waiting for, that big pullback that everybody's scared of and waiting for. When people are really scared to death, then I'll say, go ahead with a leap on Boeing. Not right now.
Folks, we'll be right back after these important messages. We will go to Dan's 3 stages, brand new invention, how he made money with Valero. We'll be right back after these important messages.
Something it likes this morning, and the NASDAQ 100 are now up about almost a full percent. The S&P 500 up about 0.5%. And I think what they like is confirmation that manufacturing is actually picking up right on schedule. It was very soft and now picking up. The thing is, that was so obvious, and everybody could know that, and you could feel, if you stop looking at the day-to-day numbers, which don't really reflect anything, they're like your weight, it goes up a little bit, it goes down a little bit, and it doesn't really mean anything. But if you go away and you see somebody and you haven't seen them in 6 months, you can tell she got a little fatter. Or
it's like a soap opera. When you come back, they're
you
still
come
the
back
same.
and seeing exactly the same. That's right. You gotta. Yeah, that's right.
Okay, talk about. You said your new invention, a 3-prong trade. You're talking about in the current market state.
All right. Here's the deal. First of all, the market isn't cheap anymore. But horizontal drilling and fracking are changing America, and they're changing the world. And a lot of what you're seeing in the market right now is a response to horizontal fracking making energy cheaper and making business better here, everywhere. And that industry itself is the center of profit right now in the world, but certainly in America.
So follow the money.
Horizontal drilling and fracking are changing America and the world. And some U.S. investors are changing their lives. I want to be changing my life every day for the better, but some people are just getting onto it. But I designed a special 5-step trade sequence because I look at fracking and I want to pick my stocks all along the supply chain. The frac sand supplier, the supplies, in other words, the hydraulic pump maker. Obviously, they start to export a little more oil, and we're producing the cheapest oil in the world, and it has to be taken somewhere. So the hydraulic pump maker to get it out of the ground, the frac sand supplier to help. That's what they use to actually fill up the cracks to get it out. Those are the guys selling the proverbial shovels on the edge of the gold field. What about the train car builder?
The rail.
Because that's right, but forget about the railroad. Everybody thinks of that. What about the guy who's making the train cars? And then the refinery,
supplier.
of course, who's benefiting from the cheaper oil and getting to make it into refined products like gasoline and liquids that compete with everybody in the world who doesn't get cheap oil like they do. So then I designed a 3-part sequence to lock in $122 of profit in 6 months on every $1,000. That's 12.3. It's $122. That's 12.2% up front. And leave more upside and reduce my risk and widen my safety zone. That's my goal. So I designed a 3-part sequence to do that. And then how did it go? Well, I'm talking about making it safer, not taking more risk, locking in that 12.3%, but leaving upside as well. And remember, that's 6 months. You're talking about 25% a year plus if the stocks go up.
Okay, you're widening your safety zone.
That's right. Now, so how did it go? Well, a change in Washington where the president blinked and allowed now crude oil to be, with a couple of face-saving adjustments, allowing it to be exported, right? So that change in Washington hit my refiner Valero, which that people are anticipating that if everybody can get the same cheap oil, it's going to take away their advantage. They dropped 13% overnight. That was the test of my sequence. My trade is still way in the money, up sharply.
Okay, that's a
and here's what's
cliffhanger.
no, it's not. I'm going to release a short instruction video that blueprints and explains the whole sequence step by step. You at home can easily practice it and duplicate it. It will make you better. I will share it for free. And if you want me to share my video with you, www.themoneyman.com.
It's called Enhancing It, the Profit Loss Enhancement Sequence video. How's that sound?
That is what it is, the Profit Loss Enhancement Sequence video by Dan Frischberg. We'll be right back. Welcome back to Radio Wall Street. This is the MoneyMan Report. Thank you very, very much for being with me. There were some more questions, and we still have time to take yours. 305-541-2350. So now the next question was, yesterday I said there's eventually going to be a correction. So the question was, am I selling my stock then? Am I getting out of the way knowing that there's going to be a correction? The bottom line is there's always going to be a correction. Markets have been very reluctant right now to allow them to drop. And the reason is because the minute it goes down a little bit, as you see, there are very few sellers. And so even a few buyers rush in and support the stock market, and they're just not letting it go down. Because the absence of sellers means any little activity by buyers moves the stock price up. The last correction was huge by recent standards, but it never really touched the S&P 500, and the NASDAQ 100 recovered quickly. Now what's happening is that the small companies are recovering and the middle-sized companies are leading. And all of this is about people realizing that the risk is lower than they thought And a lot of it has to do, I know this is not a political show, but I'm going to tell you sometimes politics matter for the value of things. The Obama administration and the Democrats and the people who are anti-capitalists who got control of our government, and they were voted for by the kids in college and all the academics like them, and they got more than half the votes. They won. And so our country's been moving away from capitalism and toward European-type socialism, and that doesn't really do anything for business. That people have been trying to do that forever. Remember, we were outstripping every other country on the globe because we have the survival of the fittest. Companies didn't make it just because they had a lot of people working there. They had to win competitively. It sharpened us. And that was going on. That's why we excelled. So we moved away from that. And you know what's happening now? That whole socialist, anti-capitalist group, enterprise that seized control of our government is being discredited as we speak. Fewer and fewer people are subscribing to them. Even the kids in college don't like them, aren't going to vote for them. I don't know if they're going to go so far as to vote for conservatives who understand capitalism. They're too young to understand that part. But they're going to stay home. And the people who care are going to be voting. And the anti-capitalist element is losing its sway. And you're seeing the swing back toward capitalism, and that makes everything in America worth more money. And that's the adjustment that you're seeing, and it's happening little by little. It's probably irreversible at this point, and maybe it's irreversible, but we see it moving more and more in that direction, and that is the reason. Anyway, I have very little time left, so I want to talk about that one more time. That
special trade that you're saying?
Yes.
Okay. You're saying you lock in 12.3% on average. You're talking
yes,
about 25%.
Well, that was this time around. That's about 26% per year, and it still has upside. Mm-hmm. But what I did is a long-term investment in each of those companies that I was talking about. The frac sand company, the train car manufacturer, the fracking pump manufacturer and supplier, the guy who makes the train cars, the pipeline.
So you're saying every step of that supply chain.
Every step of the supply chain. I made a long-term investment. It's a three-part sequence. A long-term investment based upon the fact that it's a good value and that it's going to go up over the years, and then locking in short-term gains based upon the eccentricities of the market right now. You have to do that because you're in a late-stage bull market. It is, in the short run, overbought. You don't want to be gambling on the timing. So what we're doing is we have the second and third part are actually using the options market to lock in short-term gains on those long-term investments, leaving a lot of upside. I have a video. It is coming out right away. There will be a website for it, but if you want to see it and you can practice it and get good at it yourself, I explain every step of it. And you can get it by emailing me now, dan@themoneyman.com. dan@themoneyman.com. I will send you that video. It will be hot off the press by tomorrow. And right after this, right now, next is
Susanna Baker
with
The Art of Experience.
The Art Experience. Yes, we'll be right back.